favorite conversations at the start of the show, and Lumax Auto Technologies is the first management. It reported a good set of Q4 numbers. The revenue zoomed by 53.5%. EBITDA margins also expanded 60 basis points at 12.1% on a year-on-year basis. To discuss this and more, we have Anmol Jain, the Managing Director of Lumax Auto Technologies, who is joining in with us. Anmol, good afternoon. Thanks a lot for joining in. I'd like to first start off with the margin question as well. What aided this improvement in margins, and do you see this figure improving past 12% to say northwards of 13 or 14% into FY25?
Well, good afternoon. And firstly, I think the margin expansion is a culmination of various factors. We had recently acquired a company, IAC India, and that is operating at a much higher margin than the typically legacy business of Lumax Auto Technology. So that is one of the reasons where the margins have expanded. Going forward, I do believe that we would be able to sustain similar margins in the next, let's say, not just FY25, but even going forward on a much better top-line growth. So, as you know, Lumax Technologies is a diverse portfolio of products and companies. And I think we are pretty much firing on all cylinders, be it IAC India, be it aftermarket, or be it the typical other joint ventures which Lumax Auto Technologies has under its umbrella.
Right. You spoke about the margins being maintained at current levels and a much higher revenue growth. Obviously, last year's revenues looked optically a lot higher because of the acquisition that you made of IAC. So let's ask you about the kind of revenue growth that you're targeting on a consolidated basis this year with all the acquisitions that you've had under your fold so far. And at the same time, at what rate are all your segments likely to grow? PVs, CVs, you have the two-wheelers and three-wheelers, etc. as well.
So from a growth point of view, I think we're looking at anywhere between, let's say, 20-25% for FY25. Going forward, I think a 15% would be the CAGR, which I would estimate for the consolidated company as a whole for over the next 3 odd years. And then again, if you see segment-wise or if you see certain entities, they would be growing much faster. For example, the two joint ventures, although on a small base, but I believe they grew by almost close to 75% in FY24, and we're expecting that revenue size to again double in FY25. The matured companies are also growing at about a 15 to 20% CAGR. So again, I think a realistic growth would be about 20 to 25% for FY25. Pretty much backed by new model launches. I do not expect the industry to grow at a similar rate, but I think penetrating into a higher value per vehicle, greater wallet share, as well as new model launches, all put together should give us that growth.
Anmol, I was going through your investor presentation and your FY23 and 24 revenue comparisons in terms of the segments. The passenger car segment now has become the largest contributing segment, is almost half of your top line compared to almost around 30% that it was in FY23. Was there a conscious effort to increase the exposure to the passenger car segment, or is this an impact of the acquisition that you made? Also, is this number likely to sustain in FY25 as well?
So both, I would say. Number one, I think if you look back 5 years, Lumax Auto Technologies was a more two-wheeler dependent company where I think almost 70 to 80% of the revenues came from the two-wheeler segment. So strategically, it was a very clear management direction that we need to get the passenger vehicle penetration much higher because again, there is much more content per vehicle, value per vehicle, as well as new technologies which play a key role in the passenger vehicle space. The acquisition of IAC India was pretty much in line with that strategic direction to try and get a bigger pie of the passenger vehicle market. Going forward, I think the trend will continue. As on today, Lumax Technologies is sitting on an order book of over 900 crores. And I believe almost close to 80% of that order book comes from the passenger vehicle segment again. So I think the momentum in the passenger vehicle will continue for the forthcoming years as well for Lumax Technologies.
For the industry, could you give us a split as to, in terms of value, what is the contribution from PVs, what is the contribution from CVs, and what is the contribution from two and three wheelers? This is for the industry, and then we'll obviously, try to equate that to how you are positioned in that.
In terms of our revenue mix, again, almost 50% comes from passenger vehicles.
No, I wanted the industry. Your revenue mix, you've uploaded on the presentation.
So when you talk about the industry, you're talking about the volumes of the industry?
The value.
Well, difficult, but I think, again, passenger vehicle would be a significant part of the value. Again, clearly the two-wheeler per vehicle contribution for us as a company would be anywhere between close to 2,000 to 3,000 per two-wheeler on certain models where we are, pretty dominant or present in a big way. Similarly, compared that to a four-wheeler value per vehicle, we would probably go as high as 40,000 per vehicle on some of the models. So it's almost a 15x value per vehicle. So clearly, the two-wheeler will never, for us at least, be able to equate from a value per vehicle quotient than that of a passenger vehicle.
Is there a value per vehicle metric that you guys track going forward, given this mix changing? I mean, per unit, the higher value you generate, the more accretive that for your business, right? So what does that number on a blended basis stand at the end of FY24, and what's your target in the next couple of years?
So for passenger vehicle, it would be close to give or take 15,000. And again, going forward, we do expect that to grow by at least 20% because of new technologies, advanced technologies, as well as a basket of products where we may not be present today. So passenger vehicle value per vehicle would be far more. In two-wheelers, we are largely present on the metallics, of course, the lighting for one key customer in Lumax Technologies, as well as the plastic business. I do not expect that to significantly grow in terms of value per vehicle, but there are certain new products which we are talking about, both in electronics and mechatronics. We do have that in our order book for FY26 onwards. Once that comes in, we do expect maybe about a 30% increase in certain OEMs for two-wheelers as well, as far as the value per vehicle is concerned.
Final question, Anmol. Your aftermarket revenue currently is around 100 crores a quarter. Do you see that expanding going forward into FY25? Do you have a ballpark figure for that as well?
Absolutely. I think we're continuously going forward in the journey of doubling our aftermarket revenues in the next, let's say, 3 to 4 years. This was my guidance in the last 2 years. By 24, there was a bit of a slowdown, not just for Lumax, but across the tier 1. We did about 8% growth in aftermarket in FY24. FY25, the guidance is that we would grow aftermarket by at least 20 to 25% on a year-on-year basis. It may start a bit slow on Q1 because I do feel that there is still a bit of pressure on realization of money from the market. But for the full year, I'm pretty bullish on registering a 20-25% growth in the aftermarket. So I think we're pretty hopeful that aftermarket will continue to be one of the key growth drivers for Lumax Technologies.
All right, take that point, Anmol. Thank you so much for joining in and clearly spelling out the guidance for the next 1 year and the next 3 years as well. 15% revenue compounding with increase in content per vehicle coming in largely from passenger vehicles. For this year itself, 20 to 25% revenue is what he's guiding for. And the aftermarket vertical, like Hormaz pointed out, should double in the next 3 to 4 years. The street likes what was said by the management. We've seen a spike in the stock price as the management was speaking. And this after a rally of almost 50% that we've seen in the last 6 to 8 months as well on Lumax Auto. What we'll do is take a short break on that note. On the other side, we'll get chatting with another management. We'll get the management of Snowman Logistics. At the same time, speak about the markets and a lot of these individual stocks which are moving around.